Hello and welcome back. This is David from the Personal Finance Squad. We have completed 3 chapters. We are now going into section 2. We're going to start here with chapter 4 in auto insurance, and this is quite a lengthy chapter, so we're probably going to break this up into a few videos because there's a lot of elements to it. So we can see right here the most important thing is auto insurance is a requirement in order to drive a vehicle. Now of course you can have auto insurance and let it expire, but that's not a good thing. It happens to people when they run into money problems, but that's not going to be us. And it's certainly not going to be Jasper. First and foremost, we need to understand what the basics of what auto insurance is. And that depends on a lot where one resides and of course by the vehicle that they're driving and many other factors. But where you live, meaning by the state, or can sometimes be the geographical area within the state, has a big effect on what an auto insurance rates are. Some of the highest states, like I live in a Midwestern state, and it's one of the highest states in the United States. And we feel the pinch here. You know, in other places, it's completely different. So what we do need to look at and understand is the basics of what entails an auto insurance plan, more so than what it costs from where you live. And we will certainly go through many factors in here what can determine how much a premium costs and what you need to have for coverage. But I will be the first to tell you that auto insurance changes quite a bit state to state. Between premiums, an amount can go up or down because of some type of change. So the important thing is to know what's in your plan and how you can make sure you're covered properly, understand what you're being covered for, and of course, like anything else, to get the best rate for what you're paying. So what we're going to do next is cover some pieces here that you're going to find in every auto insurance plan. And you can see the first one here is liability coverage. Here's a great example. Someone's injured or killed, or property damage. So what liability insurance is a protection for people that make claims against the policyholder. So that would be me saying, I have an accident and it wasn't my fault. So it would make the other driver liable. So here's a good example. Suppose a driver ran a stop sign and broadsided another car. So this was the accident, I was broadsided. And there were passengers injured, unfortunately, but now we say, you know what, we know the driver was written a ticket and has to assume responsibility for the accident. So they are considered, which you'll hear a lot with accidents if you're not familiar with this, at fault. And that's where the liability coverage comes into play. So that means your insurance company will defend you, the policyholder, by paying claims to the passengers that were injured. So let me repeat that. So that means the person who was at fault has an insurance company, and it means my insurance company wants to make sure that I am reimbursed, that they're reimbursed for the losses that were incurred. And now it also can include medical and hospital and rehabilitation if it happens, nursing care, loss of income because you can't work, and that's why we have an emergency fund, right? Things like this can happen, and certainly suffering perhaps be a sum of money. There's broad interpretation there, but that's what liability is supposed to cover. Now we want to talk about liability coverage amounts. So you can see right here where I was talking about how states differ. Right off the bat, not every state requires liability coverage, although the ones that don't may have laws for financial responsibility, which means in some shape or form you're still going to pay. It might just be covered in a different way in the policy. So you can see right here an agent may say, hey, you know what? You need to meet the minimum state requirements. As insurance companies will cover up to the amount of the coverage that is taken out of the policy. So now we just talked about liability coverage in the last paragraph, and we say here that in the event that liability coverage is used and the damages exceed the coverage limit, the policyholder could be held responsible for the remainder of the damages. That can mean, for example, let's just use a very, very loose interpretation, but let's say that this accident where I was broadsided and the coverage for liability was $1,000 and it ended up being $3,000. So that driver could be in some cases liable for that additional $2,000. Things like this can happen, and certainly suffering perhaps, you know, it could be a sum of money. Now that's a broad interpretation there, but that's what liability is supposed to cover. Now we want to talk about liability coverage amounts. So you can see right here where I was talking about how states differ. right off the bat, not every state requires liability coverage, although the ones that don't may have laws for financial responsibility, which means in some shape or form you're still going to pay. It might just be covered in a different way in the policy. So you can see right here, an agent may say, hey, you know what? You need to meet the minimum state requirements. So insurance companies will cover up to the amount of the coverage that is taken out of the policy. So now we just talked about liability coverage in the last paragraph, and we said, if we say here that in the event that liability coverage is used and the damages exceed the coverage limit, the policyholder could be held responsible for the remainder of the damages. That can mean, for example, let's just use a very, very loose interpretation, but let's say that this accident where I was broadsided and the coverage for liability was $1,000 and it ended up being $3,000. So this last passage is saying that that driver could be in some cases liable for that additional $2,000. Doesn't mean that it actually is a sufficient amount of coverage has been obtained. So that's why the reason is that most states require a small amount of protection and leaving a policy falling short. This is why your agent needs to tell you what they feel is a good general coverage. In most cases, the coverage is a lot larger than you may think. We're using some very loose interpretations here. Okay, so let's block this off a little bit here. So in a policy declaration, you can see that you have the XX/XX/XX. So, and then what we're referring to is these three numbers here, which is this. Bodily injury is the first, followed by the second one here for individuals, and then property damage. You can see these are just general coverage amounts I threw in there. So you want to know these are the three areas that you want to have known that are going to cover based on the situation of the accident. So we just saw right here that I put some base numbers in here. Again, at the time of this video, you can see how much coverage, liability coverage is necessary. And for example here, we see 100, 300, 100. A single limit instance is what we're saying here. $300,000. So this is kind of repeating what I just said. You might see coverages more like this amount rather than these 20, 40, 25. So if you lease a vehicle, oftentimes they have coverage limits you must have on your vehicle because it's actually their car that you're, in a sense, you're leasing or really renting from them. Okay, so that's the first section, liability. And remember, this is general information. When it all comes down to with all of this, you're going to have to certainly talk to your agent and make sure you tell them your needs. They'll tell you the things you should have, and it'll be more clear as you go because there's a lot of components to it. Okay, the next section here is no-fault insurance. When an accident occurs, it's not always clear who's at fault. So even though someone may be issued a ticket for something, they might not be considered at fault. There's a lot of screwy situations when you have a traffic incident, and so oftentimes insurance companies will battle with each other about really who is at fault, even though they both believe that they're correct, or they can battle it out and come up with some way to balance the equation. So you can see right here, this can lead to legal actions. It can be very expensive if an accident victim chooses to take recourse. So what we're saying here is someone may choose to sue. And the victim may not end up with any restitution even though they feel they are deserving of it. And that's what I was getting at. You might be right, but maybe the other company's battling, and so you're not right, and these things can stretch out, and you could go a long time without getting any restitution or resolution of the situation. So that goes back to liability again, which is the main coverage, but you can see the liability insurance is the main policyholder's defense from others. But no fault says this is an attempt to move all fault from the liability. So the premise behind no fault is to pay for medical expenses by the victim's own insurance companies, no matter who the blame for the accident. Therefore, the cost can be eliminated and possibly the delays of any legal actions. So they're separating liability from the fault. That's what no fault does. They want to strip it out of there. So some of this may be very hard to decipher, and in fact, if I don't keep an eye on it, I probably can't decipher all of it. It's something and depending on where you live, you got to keep an eye on this stuff and just make sure you're covered the right way, because you're not going to know this verbatim. It's not as simple as doing some basic math like in our other exercises to build a budget. This is just what occurs with having auto insurance, but you certainly need to be aware that it exists. Okay, you're going to hear me say this, but this depends on where you live. Variances of coverages between the states. So when we get a little further into the no fault, we can see it's back to what the states say. Some require no fault coverage, and some allow for add-ons with plans where coverage can be increased. So here's some key pieces in here about no fault plans. They don't pay for pain and suffering. The policyholder would have to sue someone if they have no fault. That's where liability comes in. Will not allow others to be sued until the no fault coverage exceeds a certain level. A policyholder cannot be sued by anyone until his or her costs exceed that limit. So what they're saying, when the no fault runs out, then you can sue. Insurance company pays the policyholder and all others covered by the policy for medical bills and lost wages. It also may cover the cost of hiring people to do household tasks because you're unable to perform those. And unfortunately, funeral expenses up to specified limits. So at this point, we're going to stop and we're going to go and create and finish this section and start another section. And if you're reading this, and I can tell you right now, this is very, very bland. The beauty is this is all in the book and you can read it anytime you want. We will get to certainly some other pieces in here where the main things that you will generally deal with in an insurance policy and how to get your rates down, like discounts and how to keep your rates down, things of that nature, and certainly putting it into the budget the right way where that's a little more fluid and understandable as we go further. So thanks for being patient, and we will see you in the next video.